Hey everybody, this is Jim at SP500chart.com. It is Sunday afternoon, a little bit before 6, September 28th, 2014. We're going to take a look at the week that ended on September 26th. See what happened for the week and also what took place on Friday. Before we do that, I need to remind you that the website and this video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Looking first on a 30-minute chart, just by way of reminder, we had a low setback in the earlier part of August. We rallied up nicely from that, entered a little period of sideways to down consolidation, broke out from that, but we had a neckline up here in a potential inverted head and shoulders pattern, which is losing some of its appeal to me, to be honest, because we have failed to get over this neckline at the point in time when you would expect it would probably happen. So I'm still going to talk about this pattern because it's not busted until we start getting down into the low 1900s. And this is still a neckline. If we can break out over this, this pattern can still work out. But failing to get over this neckline this week means we are now in an extended period where that failure feels more and more like maybe the market is starting to run out of some steam. We'll know for sure if we start taking out some support lines that are currently essentially every line that's underneath us. We'll take a look at that a little bit more. So we left shoulder, potential head, hit the neckline, slide back down, come back to the neckline, slide down even harder. Okay? That's what I'm talking about. So putting that in perspective, that sort of makes it look like, wow, this thing is turning the S&P back a little bit stronger than what we have been used to seeing when we've seen these inverted head and shoulders patterns before. Now, the low of the week was around 1965, a little bit higher, about 1966. And I will remind you, just for what it's worth, that there was a point in time when we were looking at a little head and shoulders top right here that kept kind of bouncing up and down under the neckline, above the neckline, under the neckline, sets a new high, back under the neckline, over the neckline, breaking through it pretty solidly on Thursday. And on Thursday, we did get down to that 1971, 1972 target that we had pointed out some weeks back. Just for what it's worth. We also, this week, remember I'd mentioned that we were in a descending channel ever since the early part of September. This was our resistance line. Here was our support line. And we broke above that resistance line on the 16th. We came back and back-tested that line on Wednesday and rallied back pretty strongly. But then, Thursday and Friday, we spent some time underneath this, what used to be resistance line, which you would expect to see behaving as support. In other words, this line on Wednesday looked like it was behaving perfectly. On Thursday and Friday, it became porous, and the S&P for about, close to a day and a half, traded underneath this line. For what it's worth, we did close above it with a pretty nice recovery on Friday. That led me to put another line on the chart this week, and this is this resistance line right here. Now, what's interesting is we did have this resistance line with the idea that if we came down and broke out over this resistance line, we would likely test our neckline. That happened. This line is even more severely slanted, so it's going to be that tells me we could possibly be seeing some more volatility ahead. In other words, if we were to break out over this line, a back test could bring us down. If we were to get a back test, that could bring us down for a retest of the 1970s by the end of this upcoming week. That's purely hypothetical. I don't know right now what are we going to do with this line. There's no real way I can tell you one way or the other. I can tell you that it looks like we did make a little rounding bottom here. If we look at this on a 5-minute chart, you could even say this is a little bit of an inverted head and shoulders if you want to, but I prefer to think of this as just a rounding bottom. Finally, another little good sign for at least Friday is the fact that we came up to about 1986 and then formed this little pretty tight, what appears to be a little bull flag. So let's see if when we enter this week on the 29th, tomorrow, let's see if this acts as a bull flag, and if we start out of the gate and come back up to challenge this line right here in the upper 1980s. As far as the week went, it wasn't that particularly good of a week, because we even though we had identified things on the chart, we had identified this rising channel. Sadly, on Monday, that channel broke pretty much right off the bat. So I guess if there's any good news it is we knew that we tagged resistance on Friday, and maybe it was being a little bit overly ambitious for me to think that perhaps this was the chance for the S&P to power up and break out over that neckline, but clearly that was not to be. So going forward, all I can say is we now have a new line of resistance that I think it should be the first line of attack on getting a renewed move over 1990. We also have an extended neckline back from this little triple top that we had back in the latter part of August and the earlier part of September. So we've got a couple reasons to think that 1990 at this point may put up a fight. So I would watch that level closely this week. If we break through 1990, then I believe we have a very good chance to at least put on another 20 points to test gap resistance at around 2010. And if we can overcome that, then we've got our neckline again up here around, I think we started about 2022, and by the end of the week our neckline is going to be up over 2025. So that's really about all I have to say. It was a week where we encountered some weakness. It was also a week in which we found that there is some support, at least for now, not too terribly far underneath us. I will want to see if maybe our green line right here that we broke on the 16th, that we traded under for about a day and a half, a little less than a day and a half. I'll be interested to see if this is tested, if now this would serve as maybe a little bit more reliable support. If we get over this neckline, then the target is still over 2100. If we fail to get over this neckline, there is a chance, because there's always a chance, there's almost always a bullish scenario and a bearish scenario. The bearish scenario is that we have a very important support line around 1904, 1905. Excuse me. If we were, excuse me again. If we were to take this level out then I think we could be setting up a move down into the low 1800s. And if we get down there, then I think we have to consider the possibility that these few brief moments over 2000 may be an intermediate to intermediate long-term top. Because if we break this support line right here, then we are breaking a line that goes back for years. And I don't think that would be a good thing, and you have to call it as you see it. If this line breaks, then I think you could look at this as being maybe the second warning shot across the bow. What's the first one? Well, the first one would be that we have an inverted head and shoulders pattern that would be the first one that did not work since the market bottom on 3/9/2009. So guys, I'm going to give my voice a rest, and I think I'm just going to let it sit right there. Let's see what the futures tell us about tomorrow. Perhaps you might want to keep an eye on that. Our red line right here is a long-term support line as well that has been working ever since January of 2013. Let's see if it can continue to work. I believe breaking this line could also be considered a first or primary shot across the bow of the bulls. So we've got two levels now to watch pretty carefully: our red line and our blue line. As if you are looking for a bearish outcome, your case is made stronger by a break of this red line. It is made much stronger by a break of this blue line. If you are a bull, your case is made by a break of this blue line short term and by an eventual break of this purple line in their intermediate and I'm going to call that intermediate term. So guys, there's your video for the week ending September 26, 2014. I appreciate you taking time out of your day to watch this, and thank you so much for your support. Take care.